Okay, so operating segment, we have done about this one. So the things that are important for operating segments, you need to know two things. Yeah? Okay, the first thing, okay, going to continue from here, isn't it? From this slide, isn't it? This is the one that we stopped last time, last class. Yeah? Okay, so the important thing that you need to know in the reporting segments here, if you need to look at the which one I can put it some things. Okay, the under reporting segment, there are two items that are this topic is under this one. You need to know the first thing is to determine the operating segment. Yeah? So operating segment is classified either based on product or business line, product or business, and then the other one based on geographical, so based on the locations. Okay, so this one, okay, from the operating segment, then we need to determine the reportable segment. Yeah? Okay, for reportable segment, we need to do two tests here. The first test is a 10% test. So 10% test here means that the assets or liability, sorry, assets or revenue or the profit or not and or profit here is should be more than 10%. Yeah? Okay, and then the second one, when you already decide for a reportable segment, the second thing that we need to check here, we need to check that the external revenue, okay, the external revenue divided by total revenue should be at least more than 75%, at least 75% or more, 75%. If the reportable segment do not fulfill this criteria, this the external revenue is not more than 75%, so they need to check, okay, they need to add new additionals or new additional reporting segment, even though this reporting segment do not fulfill the 10% test, even it's not fulfill the 10% test, so you need to have the additionals reportable segment. Yeah? So to fulfill the second criteria, which is external revenue should be more than 75%. Yeah? So this is what we learned last time. Yeah? Okay, so we try to proceed with this example. Try to look at these examples here. Okay, operating A has a entity A as operating segment, A and F, so we have 6 altogether. The revenue and external, so this one is already combined between internal and external, so we do not know how much is the value of the external revenue, so we cannot check for this one, yeah, okay, because it's already combined here. Okay, and then profit or loss, and the entity A need to determine how many reportable segment it has. The figure says, okay, this is what you have. So we need to know how many our reportable segments. So segments here we already determined. So we have altogether 6 segments, A, B, C, D, E, and F. From that segment, which one become this is already done, operating segments here, 6 segments. And then for a reportable segment, which fulfill for the reportable segment. Yeah. Okay, for reportable segment, you need to check from this one, the total revenue, profit or loss, or total asset. Okay, so the total revenue, so all of this item, okay, A, B, total up here. So all of this one need to divide with 30.500. Yeah? For example, say 11 divided by 30,500 to check for the 10% test. So we need to check for 10% test. Okay, for the total revenue, okay, so revenue of each segment need to divide with 3,500. Yeah? Okay, and then I just want to skip this one for a while. Just want to explain for the total asset because this one more explanations here. Okay, for total assets here is 25 divided by 68.5 here. So this one, I'm going to divide all of this one, going to divide with this figure, say 68,500. Okay, for this profit here, okay, this one you have to be careful here. Because it said that the greater of profit or loss. Yeah? So the first thing you need to calculate the segment with a profit. So segment with a profit here is a segment A. Okay, A plus B and then plus E and then plus F. So A is 2, B here is 1, Okay, the profit, yeah. Okay, about the profit. And then E is 0.6 and the F is 0.4. Altogether, you have 4. Okay, that is a profit. Okay, the next one, you have a loss here. Because segment C and segment D, where can I put it here? Okay, for a loss here, you have D and C and D, yeah? Okay, C and D, when you total up, you have 1000, and then this one is 500. So you're going to have here 1.5 here. Okay, so for the profit here, you need to compare between profit and loss. Okay, profit and loss. And then we need to choose the higher between these two, become a denominator. So the profit that we have here is 4. The loss that we have here is 1.5. So the higher will be the profit. So 4 become the denominator. So this one, 2 divided by 4, 1 divided by 4. This one also 1 divided by 4. 0.5 divided by 4, 0.6 divided by 4, and then 0.4 divided by 4. So this is we're going to, so before profits here, you have to be careful when we have a combinations of a profit and losses. So combinations of profit or loss, so you need to total up segment that have a profit. So in this case, the segments that have a profit here is A, B, and E and F. So altogether, the total profit here is 4. Okay, the second one, you need to determine segment that have a loss. So segment that have a loss here is C and D. The total loss here is 1.5. Then you compare between profit and loss. So profit here is 4, loss here is 1.5. And then you're going to choose the higher between these two. So the higher between these two here is 4. So all of this one need to divide with 4. Let's say the highest is a loss. Let's say the loss here is 15. So we're going to choose a loss, become the denominator. So you need to compare. So be careful with the profit or loss here. When you have a combinations of profit and loss, you need to total up the segment that have a profit and then the segment that have a loss, and then compare. Choose the higher between that two, right? Okay, so that is what you have for revenue, divide by 13,500. For the profit columns here, we need to divide with 4. And then for the assets here, every segment need to divide with 68.5 here. So we're going to determine this one. So we said that if you calculate this one, just calculate also only here. So you find that this one is about 11%. If you calculate 11, this one is, sorry, not 11 there, not the other one. Wait, not this one. So, sorry. So 11 divided by 30 here is supposed to be, not 11, the other one, yeah, supposed to be, I don't have pencil. It's not 11, it's supposed to be 36 here. Okay, 36 for here, and then this one is 23. You can calculate, yeah, 9.8, 11, 13, and then the other one is 5. Okay, based on the profit. Okay, that one is based on revenue. Based on the profit here, you have 50, okay, 25, 25, okay, 12.5. Okay, this one you're going to have here 15, and then 10. Okay, and then based for this one, okay, where can I put here? Can I put it here? So you're going to have here is 36, 23 here. This one is 15. Okay, this one is 10, nearly 10, 10. This one is 5. Okay, so based on this one, if you look at here, based on the revenue here, based on revenue, F fill for the revenue as not fulfilled because it's only 5%. Yeah? Okay, and then based on the total profit, all of the company, all of the segment fulfill the criteria based on the profit. Okay, and then based on the total asset, F also do not fulfill the criteria of an asset. Do not fulfill that one. So based on this one, A, B, C, D, and E can be a reportable segment. So now we need to look at no, C. C here. If you look at here, C also do not fulfill the total revenue. Okay, but okay, we analyze for C here. So we said that the fund can confirm to be a reportable segment is A, B, D, and E because they fulfill all that three criteria. But for C here, even though C do not fulfill the criteria of revenue, but it fulfill the criteria of profit, and also the criteria of asset. So C also can be a reportable segment. Okay, now we check for F. F do not fulfill the revenue and also do not fulfill the asset, but F fulfill for the profit. So F also can be a reportable segment. Yeah. Okay. So you need to divide. Make sure that you know which one become a denominator. This one is divided by this one. This one is divided by 4. We choose the higher between profit or loss. Profit is 4. Loss here is 1.5 here. So we're going to choose the higher. This one is divided by 68,500 here. So it said that A, B, D, and E is clearly satisfy all the three criteria, and they are can be separately reported. Can be separately report as a reportable segment. So they do not need to test for the profit test. Segment C does not fully satisfy the revenue test, but it does satisfy the asset test. So it become a reportable segment. So you don't need to consider for the profit test. At least one criteria you fulfill. Yeah? Segment F do not fulfill the revenue and asset test, but it fulfill the or satisfy the profit test. Yeah? Because it's have that 10% for the profit. Yeah? So the F is also a reportable segment. So as a conclusion here, A, B, C, D, and F here is considered as a reportable segment. So if you want to check for the external revenue divided by total revenue, we cannot have this one because we don't have information about the external revenue. But since all the segment can be a reportable segment, so mean that 75% should already fulfill. Okay. So is it okay with that one? Okay, about these illustrations. Is it okay? Any questions that you have here? Okay, sorry about that one. Do you have any questions? There are many sound effects here. I know because I'm sitting next to the main roads here. Okay, so any questions that you have about this one? Is it okay with this example, illustration 3? So okay? Okay, if we don't have external revenue, we no need to test. Yes, we don't have information, so how can we test for that one? Yeah? So just fulfill the 10%, but in this case, it's look that A, B, C, D, E, and F is become a reportable segment. So for sure that there are more than 75% for the external because all of that segment become a reportable segment, yeah, in this situation. So is it okay, Paul? Okay. So we proceed with the next one. So we have these illustrations. And then with these illustrations, so the reportable segment, operating segment that do not meet any of the quantitative threshold may be considered as a reportable segment and separately disclosed if management believe, okay, even though it does not meet, but if management believe that the information is useful to the user, it can be a reportable segment also, even though it's not meet. Information about other business activity and operating segment that are not reportable, yeah, which are not reportable, should be combined together and disclosed in all other segments. So refer to illustration 2. Refer to illustration 2. If you refer back to illustration 2, component 1 and component 2 become a reportable segment. Component 3 and component 4 is a combined segment. Yeah? So put it under other segments. Combined segments. Okay. So refer back to example 2. Okay, to ensure the issues of comparability is taken care, so the standard required that the segment that have been identified as a reportable segment in immediately preceding year period should continue to be a reportable segment for the current period, even though it's no longer meet the criteria in para 13, the 10% threshold. If the management of the entity judge that the segment to be a continuing significant, for example, here, in the year 2020, 2021. Okay, 2020 here. Okay, this one become a reportable segment. Let's say segment A become a reportable segment. Okay, and then let's say in the year 2021, you check the test. Okay, nak fulfill the 10% test, so it cannot be a reportable segment. But the standard mentions that even though okay, A do not fulfill the criteria of reportable segment, but if already recognized in the year 2020, so in the year 2021 should continue to become a reportable segment. So this is for the purpose of comparability. Yeah. Okay. And then the other situations here, the segment that have been identified as a reportable segment in the current year, the prior period segment data is presented for a comparative purpose should be restated. Should be restated to reflect the newly reportable segment as a separate segment. For example, here in the year 2020, not fulfill criteria as a reportable segment. But in the year 2020, this segment or this segments become a reportable segment. So for the purpose of comparability, in the year 2020, we need to restate. Restate and then this one report as a also as a reportable segment. So this is for the purpose of comparability. Okay, these provisions is applicable even though the segment do not satisfy the criteria of para 13 in the prior year, unless the necessary information is not available and the cost to develop it would be excessive. Okay, if the cost is over the benefit, then we don't need to do for the restated. Okay, so this is a situations on the for the purpose of comparability. Okay, prior year is reporting segment, so the current year should be reporting segment also, even though it's not fulfilled the criteria. Okay, current year is a reporting segment, so the prior year should be a reporting segment, even though do not fulfill the criteria. Okay, so this one we need to restate it because it's already a prior year. This one we don't have to restate it because now it's in a current year that you do not fulfill the reportable segments criteria. Okay. There may be a practical limit to the number of reportable segments that an entity separately disclose. Beyond this, which segment information may become too detailed. So it means that when you have more segment, the information will be more detailed. Okay, more detailed. So there is no precise limit to be determined as a number of the maximum or the limit of the segment, but okay, if that one is increased above 10, then it should be considered whether that one is practical or not. So most of the time, the segments here we try to limit up to 10 only, 10 reportable segment. But if you look at, even though there are big companies here, the number of the segment is not more than 10. If you look at the Saindabi, even though it's a big company, it has about 5 or 6 segments only. No, okay, we try to limit the number of the segment because once you have more reporting segment, you need to disclose information which is more details. Okay, very costly sometimes. Okay, so that is what you have for practical limit, not more than 10. Yeah. Okay. So for the disclosures, okay, for the disclosure, you need to know how the company, they need to disclose how they identify their operating segment, either based on type of product and services or from which operating segment derive its revenue, based on the product or services. And then the other one is reported segment profit or loss, okay, including the segment assets and liability. Reconciliations of total segment revenue, reported loss or profit or loss, assets and liability, and others material item to the corresponding item in the organization financial statement. So operating segments here is a small part from, they still need to produce a financial statement, but the financial statement is not detailed as the organization statements. They only provide a less information as compared with the organization financial statement. But at the end of the year, they need to reconcile so that the information is in line with the organization financial statements. Okay, this one is important. Organization-wide disclosure. So organization-wide disclosures here, you have this note at the end of the you have this the explanation at the end of the note. So organization-wide disclosures here means that organizations or entity that do not have a segment. We're going to discuss later about this one. Okay, only or they report only one reportable segment means that they only have one segment. Yeah, we're going to explain later about this one at the end of the notes. Analysis of revenue and certain non-current asset by geographical areas. Okay, and then information about transaction with a major customer. So this is among disclosure that we need to disclose in the operating segment, financial statement. Operating segment, they still need to provide a financial statement, but the financial statement is less detailed as compared to the organization financial statements. Okay. So the standard required to disclose the items that we have need to disclose is general information, informations about the profit or loss, reported profit or loss, okay, including specific revenue and expense, okay, assets and liabilities. So they need to provide profit or loss, assets and liability. Yeah? So it means that they have to have income statement and also of segments of financial position. But that one is not detailed as compared to the organization financial statement. And then the last thing they need to reconcile of the total segment revenue, assets and liability with the entity amount, with the organization's amount. So this is the thing that we have here. Okay, reconcile the balance sheets amount with the balance sheets amount of the entity at each date at the balance sheets of present. Yeah? So operating segment, they need to reconcile the balance sheets. Okay, operating segment balance sheet need to reconcile with the entity balance sheets. Yeah? Operating segments here, maybe you're going to have more 1, 2, 3 segments. So they're going to provide the income segment and also balance sheet, but the information here is not details. Yeah? Okay, and then at the end of the year, when the entity prepare a financial statement, they need to reconcile this information with the entity financial statements. Yeah? Okay, entity also in a general information, the entity should disclose the factor used to identify the reportable segment. So what factor that are using, is it based on the economic environments or based on the 10% test? Okay, types of product and service from each of reportable segment derive its revenue. So what types of and services that can derive a revenue? That one is in general information. Okay, so para 23 also mentions amounting that you need to disclose, revenue from the external transaction, interest and so on. Just read this one for this disclosure. Okay, para 24. So about the reportables, entity disclose item relate with each of reportable segment, about the investment in associate, NJV that are using the equity methods, amount of addition to non-current asset other than financial instruments. So this is additional disclosure. Okay, so for measurements here, okay, for measurements, we require entity to provide an explanations of the measurement of segment profit, how they measure the segment profit or loss, assets, and also the liability for each of reportable segment. At minimum, they need to disclose the basic accounting used for any of the transaction between reportable segment, natures of difference between measurement, the nature of difference between measurement of the reportable segment, assets and liability. So this is a month disclosure. You just read this one. Yeah. Okay, this one also just read this one. Okay, reconciliation. At the end, they need to reconcile. Okay, the total of reportable segment revenue to the entity revenue. So they need to reconcile operating segment revenue to the entity revenue. Reconcile everything. Yeah? The profit, the assets, and also the liability. Yeah? Okay, so this one I'm going to focus about this one. Entity-wide disclosure. So entity-wide disclosure here means that this entity do not have a segment. It only have one segment. Yeah? Only one reportable segment. Yeah? Okay, so once they only have one reportable segment, they need to report. Okay, they need to report information or need to disclose information about the product and service, information about the geographical area, and also the information about the major customer. So product and service, geographical, and then major customer. In the case when the company do not provide a reportable segment, they do not divide their operation into operating segments. So they only provide one information. So they need to disclose a product, what types of product that they have, geographical areas, and then who are their major customer. Okay. So this is important. So this is summarize here, summarize what we need to know or what you need to know in this chapter. Okay, the first one, you need to identify the operating segment. We should start with the operating segment. So operating segment supposed to be either based on product or based on business, either one. Okay, business, and then the other one based on geography. Okay, and then from the operating segment, then we need to determine the reportable segment. So reportable segments here is you need to fulfill the 10% test. For reportable segment is 10% test of assets or revenue or profit. The one, either or. Okay, and then the second step will check if the total external revenue, okay, attributable to reportable segment constitute at least 70% of the consolidated or entities revenue. Okay, so the external revenue of reportable segment, okay, reportable segment should be more than 70% of the total revenue. Okay. So it said that failure to meet the second criteria, which is one, MRS 8 require the additional operating segment to be identified as a reportable segment, even though they do not meet the 10% threshold. So if they fulfill this one, then if do not fulfill the 75%, so you need to add new reportable segment until you reach to 75%. Even though the new reportable segment do not fulfill the 10% criteria. Okay. Okay, we try to look at the last questions that you have here. Okay, so this question is related with the Maju Berhad. Okay, Maju Berhad is diversified entity. So when you have the word diversified entity here, means that they're going to have more than one segment. They are diversified, okay, operate in 9 segments. So you have 9 operating segment. Altogether, you have 9. So based on product and also based on geographical. Okay, so based on product and based on geographical. So this is what they have. Okay, so this is your operating segment. So operating segment in terms of nature of business, and then the other one based on geographical. Okay, so for business, they have 5 altogether. And then for geographical, they have 4. So altogether would be 9, 9 operating segments. Okay, so we have to make sure that the total nature of business here, either total asset or sales or the profit or assets here, sales, profit, external profit here should equal. So this one should equal to this one. Should equal. So supposed to be 4. Okay, just change this one. 19. Okay, and then this one should equals this one. Because maybe in Thailand we have a beef, we have a beverage, we have a hotel. Maybe in Indonesia we have retail, and then we have PKG in Philippines, another segment. So at the end, the total based on nature of business should equal to the totals of a geographical area, the total amount of totals. Okay, should be the same. Okay, this one, I think this one is 2323, 2323. Okay, same as this one, Okay, this one is the same. You just change this figure. Okay, so now we need to identify which one is a reportable segment. Okay, so this is the step that we have. Step 1, you need to identify those that will represent at least 10% of entity sales profit. Not N, supposed to be all. Because this one is any of that criteria. Okay, step 2, need to check if the total external revenue attributable to reportable segment constitute of at least 75% of the total consolidated revenue. So total consolidated revenue is not 13. It's supposed to be 19,754. change this one, 19,754. All operating segments qualify as reportable segments should pass for the external revenue requirement, and that it should meet at least 75%. Okay, should that not being in the case, so require an additional segment to be reportable, even though it's does not the 10% threshold in the step one. So this is what we have. So just check from this one. Okay, for the beef here, okay, for the business here, every of these figures, okay, the one that you have here is need to divide with 19,755, 19,754, or need to divide with this one. Okay, and then for profit asset later on, okay, for profit later on, for the assets here, if you look at here, you need to divide with 20,3035, all of these assets. But for profit, you need to calculate. So profit here and then loss, because you have combinations of profit and loss. Okay, for a profit, how much you have for profit here? So total up profit that you have here is from beef, 631 plus 714, and then plus 1510. So you're going to have here is 2855. Okay, 2855. And then for the loss here, you have 131 plus 401. So you're going to have here is a 532. Okay, so which one that you're going to select to be a denominator here? So you're going to choose the higher between these two. So the highest here will be 2855 to be a denominator. So all this figure need to divide with 2855. Okay, so we're going to calculate this one. Okay, same thing for this one. You need to calculate this one, 1536. Okay, and then total up this one, and then the loss that you have here is only this figure, then divide with that one. Okay, so you fulfill here. If you look at here for beef here, we try for beef here. So for beef here, you have 2249. Okay, divide by you have 19,754. Okay, is equals to 11%. So I just calculate this one only for one. So beverage here is 6%. Okay, hotel 24%. Okay, for this one is 19%. This one is 38%. Okay, for Thailand you have 35. Okay, this one is 7%. Okay, and then for Philippines here, let me calculate for Philippines here. How much you have for Philippines? Philippines, 3451. 3451 divided by, can you calculate for that one? You can calculate that one. Okay, not sure for that one. The answer is yes then. I haven't calculated for that one. Any of you, can you calculate that one for Philippines and also for Cambodia? How much you have for that one? Philippines here you have, any of you calculate that one for Philippines? 3, 4. Okay, divide with, any of you? Divide with 19, 7. Okay, 17. The next one, Cambodia. Oh, sorry. But I pencil. Go to the next one. Okay, so do you have here? Okay. So you have here is 17 from here, and then the next one you have 39. 30, can I put it as 39.6? Okay, so if you look at here, just calculate for total sales. Okay, for this one. So 11 that you have here is fulfilled, yes, and then beverage not fulfilled. Okay, hotel only for this one, beverage, and then this one for Indonesia, no. And so you have to calculate for this one, for Indonesia. Is it no for this one? You calculate this one for Indonesia. Okay, is it no? Can you check for this one? Oh, this one is based on profit here. So we need to recalculate the profits here. So the profit that you have here, can we calculate here? 1536 plus 494 and then plus 771. So how much you have for this one? Yeah, this will be the highest here, 1536. Can we calculate that one? 1536 plus 494 plus 771. So you're going to have to add. Okay, and then divide by, for Indonesia, how much you have for Indonesia? 1000, isn't it? 1000 divided by 2.8. 1000 divided by 2.8. Okay, 35%, isn't it? Isn't it 35%? So it's supposed to be yes. I think that. Okay, so only this one. The rest is okay, except for this one. Yeah. Okay. The answer yes, yes, you can check later on. Yeah. Okay, for this one. Okay, so done with this one. I think this is the end of the notes. Okay. Why 1000? Okay, Indonesia, what you have for Indonesia? Indonesia is 1000. It's 1000. Sorry. Indonesia is 478. Sorry. Yes. Supposed to be 478, isn't it? Okay, 478. What you have for this one? 478 divided by 2801. 478 17. 2801. Okay, so 17 here, so means that it's still fulfilled, isn't it? Okay, so we need to check for this one. Okay, this one is supposed to be yes. Yeah? Okay, the rest is okay, only these two. Okay. So any questions that you have here? So be careful with this one, total profit. Okay, choose the highest between like two one. Okay. Okay, any question related with the operating segment? So the importance of operating segment that you need to know. This one, the step. Okay, this one actually. This one. You need to know about this one. Make sure that you understand about this one. And then entity, no, this one. And okay, disclosure, this part is important for the disclosure. And then, okay, we limit the operating segment up to 10 only. Okay, so this is also important about the prior and the current because of the comparability. Okay, this one is also important. Okay, and then please look at again the illustrations 3. Okay, because there is a combinations of profit and loss. Okay, and then this one. This one is also important here, even though it's not fulfill the criteria, but if they have a similar economic characteristic, then they may consider to be a reportable segment. Yeah? Can join together. They can join together the two operating segment that do not fulfill the 10% test. They can join together if they have this criteria, similar in economic benefit. Yeah. Okay. So this one is the international. Okay. The test here. The test here is 10% test and also the 75% check, for the external revenue. Okay. So also important. See. Okay, so that is the things that you need to know. Okay, then the other one is about this one. Applications. You need to determine, okay, to identify the who is the chief of decision maker, operating decision maker, or sometimes they use the word CEO, either any of them. Okay, operating segment, and then determines the reportable segments, and then disclose the required information. So the important things here is about this one. We need to the which one? The definitions. Host market. Okay. Component. Okay. This one to determine the operating segment. Okay. From operating segment, then we're going to have a reportable segment. Operating segments here should be reviewed by the CEO or CODM. Okay, and then the business activity has its own revenue and expense, and they're going to prepare a separate financial information. Okay, so that is what you have for operating segment. So please make sure that you understand the illustrations 3. Yeah. Okay. Okay, any questions that you have for operating segment? So if not, we're going to proceed with the notes that you have there. Okay, can we proceed with the related party? Okay, we're going to proceed with the related party. Yeah. Okay. Okay, the next one will be your related party. Not operating segment. Supposed to be your related party. Okay. So related party is more on theory, yeah. So I just going to skip some of the one, especially for the disclosure. Okay. So now we're going to look at the related party. So the important thing for the related party, you need to do two things only for this one, yeah. Who is the related party? What is a related party transaction? So, okay, so standard that we focus here is 1 to 4. 1 to 4 here discuss about the related party disclosure. It's more on a disclosure. So the standard dealing with the disclosure. Okay, so we're going to look at here for the related party, the things that are important here. We need to know what is a related party and their relationship. What is the related party and their relationship? Identify the related party transaction. So transaction here is a normal transaction, but this transaction here is between entity and related party. Yeah? So that one called as a related party transaction, but the entity is like a normal entity. You have a purchase, you have a sales, loan, and so on. Just a normal transactions. But this transaction was the one doing between entity and related party. Yeah? Okay, and then the last one, able to present the disclosure. So this is what it mentions by the standard 1 to 4. Is this for standard focus on to disclose the related party transactions. Okay, so for the related party disclosure, so we need to know the objective and then the scope, purpose for the disclosure. So which this is 1 to 4. Okay, definitions, and also the last part is what is the thing that we need to disclose. Okay, so we're going to look at definitions here. Who is a related party? Yeah? So a related party here is a person, okay, individual or entity that is related to the entity that is preparing its financial statement. So this one is related with a person or entity that has a relationship with a reporting entity. Yeah? Reporting entity. So that is a related party. Persons or individual that has a relationship with a reporting entity. Yeah? What is related party transaction? Is a transfer of resources, services or obligations between reporting entity and related party, regardless of whatever whether a price is charged or not. So when you have a related party, they're going to related party transaction, they're going to be a conflict of interest. Yeah? Because you know that person that you're dealing with a transactions, maybe there is in terms of the reducing in the price. So that is what we need to know whether that situation exists. So the disclosure, the standard 1 to 5 provide a disclosure when you have a mentions that when you have the related party transaction, you need to disclose all the information that relate with that RPT, yeah, related party transaction. Okay, so you're going to have for this one. Okay, so you're going to have here. So for example, here is a company often seek to secure business deal with a party which whom they are familiar. So normally company, when they want to do a business, they're going to deal with a party that they are familiar with or have a common interest. Okay, this type of transactions are legal. This transaction is legal, and the special relationship inherent between involved party create a potential conflict of interest because you are doing a transaction with a party that you are familiar. So even though the transaction is legal, but they can create a conflict of interest. However, there is a regulation exists to prevent an unfair advantage granted to the related party. So this one we come out with MFRS 124. Yeah? So when you have a transactions between related party, okay, related party here is a familiar individuals of entity, so they can create a conflict of interest. So to reduce a conflict and interest, the standard come out 1 to 5 here, 1 to 4 to mention or to stated that what kinds of information that you need to disclose, the company that need to disclose when they have a related party transactions. Okay, there are a number of regulatory procedures that are in place to ensure that related party transactions are conflict-free and do not negatively affect the value of the shareholders. Okay, so we try to come up with a procedures or regulatory procedures so that the related party transaction does not affect the value of other shareholders. Related party and business service can take many different forms. Okay, for example, here is in terms of business affiliates, shareholders group, subsidiary, and a minority owned company. Minority owned company here, examples here is in terms of if you have the associates. Okay, related party transaction. So this is related party, example of related party. And the related party transaction can include any of the normal transaction. For example, sale, lease, service agreement, and loan agreements. Yeah? Okay, two different things. This is a related party refer to a person or entity. Okay. Related party transactions here is a transaction between related party with the reporting entity. Yeah? Okay. Okay, examples of related party transactions here is a normal one, a normal transaction purchase of souls of good property, services, lease, R&D, license, finance agreement, guarantee, commitment, settlements of liability. So this is a normal transaction, like other transaction with an outside party. Yeah? Okay, so the things that are important is this part. What is the benefit of related parties? So the first benefit here is related with a contracting efficiency. So contracting efficiency here because you already know the persons that you are dealing with. So you're going to reduce some of the obstacles. Okay, so as compare the negotiation contract with a third party. So the related party can draw out a contract which is more quickly than they can with a non-related party. So you can have a contract which is more quickly because you already know each other. Okay. If, for example, here you have a parent. So parents here is in a shoemaking business. Okay, shoemaking. And then they have a subsidiaries here. Parent have a subsidiary. So subsidiaries here is a leather producer, and then the other one they have associates here. Associates is with a design of show. So they were going to work together. If you look at here, parent have a control over subsidiaries, and then they also have a significant influence over the associate. So parents know his subsidiary, parents know his associate. So they are know each other, so the contract become efficiency means that there is less cost and then less time to bind that with or to come up with a contract, because they are familiar with each other. Okay. Okay, they can be a superior option to uncertainty that come with dealing with a unfamiliar third party. So the first benefit here is a contracting efficiency. Means that your contract can be assigned or can be dealt in a short time, because all the party are familiar. Okay, the second effect here, Okay, the first benefit is contracting efficiency because of familiar. Okay, the second benefit here is a person knowledge, relevant knowledge. So relevant knowledge here because of the third party's strategic person affiliated with the company may be able to provide relevant knowledge if they represent a certain group with whom the company does a business. A company with a large number of suppliers, customer and advisor may need to nominate individuals to the board who are aligned with this entity. So means that they need to have to ensure that the company has the expertise in its needs to make a reasoned decisions. So they're going to have the second one is relevant knowledge. Okay, the third one is due to the facilitations of investment. Okay, related party here, they can facilitate investment, they can increase the investments, okay, business prospect, or maybe in terms of loans applications. So we have three benefits that relate with a related party. However, this one, however, the related party transaction must be legitimate and that not abusive, okay, where the proper system of check and balance is according with the accounting standard. So then they have, even though they have the advantage here, okay, but they are bound, okay, they are bound together or they're going to bond together with a standard. So to make sure that the related party transactions are conducted within these boundaries. So the accounting example of the transactions here is between example of related party transactions that we have here is the business transactions between major business transactions between major shareholders in the renovation business and an entity where the entity engaged in a shareholder contract to renovate the office. So the entity want to renovate the office. Okay, renovate the office. Okay, they want to do a renovation, so they hire a contractor. Okay, and then this contractor is their shareholder. So means that they have a influence here. The transaction to perform reversion of the entity office will be deemed as a related party transaction because this contractor is the shareholder of this entity. Yeah? So they're going to consider as a related party transaction. The management of policy and procedure that track related party transactions and the business need to deal with they should have a special transaction that must be approved. Okay, if you want to have a transaction with a related party, that transaction need to be approved. Okay, the first one, the transaction RPT here need to approved by the management of the company or management of the company, okay, or by board of directors. So approved by, this is the first condition, RPT transaction need to be approved by management of BOD, board of directors. Some specific standard and procedures set for related party transaction include the monitoring of payment, competitiveness, payment terms, regulatory transaction, and authorized expense. Second things here, you need to have a standards and procedure, SOP. Okay, set. Okay, they're going to have the first one, the transaction should be approved, and then there is a standard and procedure for that transaction. So overall, all related party transaction must be transparent, reported, need to be reported, need to disclose actually, to ensure that all actions are legal, okay, and then ethical and do not harm others, shareholders value. So we need to have a proper disclosure for a related party transaction in order to make sure that the action is legal, ethical, and do not affect the or do not harm the shareholders' value. Okay, so that it come up with the MFRS 124. So this one is MFRS 124. This 124 here, the objective here is to provide a necessary disclosure. Okay, necessary disclosure to draw attention to the possibility that its financial position and profit or loss may be have been affected by the existence of the related party transaction and outstanding balance, including commitment with others parties. So the standards here come up with the objective to make sure that when the entity has a related party transaction, they need to make a proper or necessary disclosure so that they're going to inform the shareholders. Because maybe the transaction, related party transaction may have effect to the assets and also to the profit of the company. Yeah? Okay, the scope here, the code for the standards here, we need to identify the relationship, the related party transaction relationship. So we have two things, yeah, relationship, and then the second one is the transaction. Okay, RPT and RPT, related party transaction, and also the related party. Who are they? Persons or entity, yeah? Persons or entity here. Identify the outstanding balance, including commitment between entity and its related party. So we need to identify what is the amount, the outstanding balance for for the transactions between entity and related party, and then identify the disclosure for item 1 and item 2. Okay, and then determine the disclosure to be made about those items. Identify, the first one identify, and then the second one is to determine the disclosure that we need to make. Okay. So that is the scope of 1 to 4. So the purpose of 1 to 4 here. Okay, so the related party relationship is a normal features of commerce and business. Related party relationship could have an effect. They may affect the profit or loss and the financial positions of the entity. Okay, profit or loss and financial position of entity may be affected by the related party transaction, related party relationship, even if related party transaction do not occur. Okay, they may have an effect even though there is no related party transactions occur. So means that even though there is no relationship transactions, still need to disclose. Okay. Knowledge about the entity transaction, outstanding balance, including commitment and relationship with related party may affect assessments of its operation by user of financial statement, including assessment of the risk and opportunity facing by the entity. So you need to provide a disclosure who is the related party, and then if there is any transaction, even though there is no transactions occur, still need to report who is your related party. Yeah? Okay, this one is important. Yeah? Okay, this diagram is very important. So make sure that you understand about this one. Yeah. Okay, so we need to determine whether they are related party or not. So related party here is a person or individual or entity with their relationship with the reporting entity. Yeah? Okay, so in this case, your reporting entity here is a parents. Yeah? This is reporting entity. Okay, now we're going to look at here, parents with a subsidiary. So parents control over subsidiary. So once parents control over subsidiary, parents and subsidiary relationship is considered as a related party because they have a control over subsidiary. Okay, parents and associates. So parent and associates here, parent have a significant influence over associate. So once parent has a significant influence over associate, so parents and associate is considered as a related party. Okay, subsidiary and associates here. Either that one is a related party also. Okay, it's also a related party here because once parent controls subsidiary, and then parent also have a significant influence over the associate. So both of this one is considered also as a related party. So be careful now with this one. Make sure that you understand this one. Yeah? Okay, and then the other one is a joint ventures company. Okay, joint ventures company A and B come out together. They work together, come up with a joint venture. Okay, A and JV here is a related party. B and JV here is also a related party, but A and B here is not related party, yeah, because they are not together. Only with the JV company they are related party, yeah. Okay, please make sure that you understand this one. But for parent and subsidiary, yes. Parent and associate, yes. And since parent control subsidiary, and then subsidiary and associate also are related party because parents control subsidiary. At the same time, parent also have a significant influence over the associate. So both of this one is considered as a related party. Okay, so be careful with this one. Make sure that you understand this one. This diagram. Yeah? Okay, so the next one. Okay, this is another thing that relate with a related party. Yeah? So related party is relate with this is reporting entity. So this one is relate with the individual. So individual here, the first individual that we have here is a, okay, if you look at here, this one is individual. Okay, previous one is an entity, entity or company. Okay, so we have here related party here, we have two, either that one is entity or persons. Yeah? So entity in terms of the subsidiary and associate, JB. Okay, and then in terms of individual, we have key management personnel, post-employment benefit, okay, and then family members. So this one is already explained in the previous slide. Yeah? Okay, so now we're going to look at another here. It's relate with the individual. We have two types here. Either that one is key management personnel, and then the other one is an employees. Okay, for employees here, we have two elements. Current employee, still are working in that company, and other one is ex-employee. Yeah? So ex-employee here, the one that still receive the pension. Yeah? They're going to receive a pension. Yeah? Okay, defined benefit plans. Yeah? Okay, key management personnel here, example for this one is the directors of the company. Yeah? So for directors, a company here will also need to look at their close family members. Okay, their close family member also considered as a related party. Okay, key personal management with the parents here is a related party. And then also this one considered as a related party. Why this one is a related party here? Because they are close member to key personnel, key management, close family member, only family member. Okay, family. Examples here is a wife, partner, children. They consider as a close family member. Okay, so and then for the post-employment benefit here is related with the employee. So they have here a pension. Employees, a current employee, they entitled for salary. As employee, they entitled for a benefit, pension plans, for examples. Okay, this one we already discussed about subsidiaries and the associate. So individual here we have two. Okay, key management personnel and then employees. Okay. So now we're going to look at what details about key management personnel. Who are they? They are having authority and responsibility in planning, directing, and controlling the activity of the entity, either direct or indirectly. So it include any director, whether they are executive or non-executive of the company. Yeah? Okay, the designation typically include the following positions or all the board of directors. Board of director for a company, maybe they have 8 members or 10 members, but it limit a formulations company, it limit to 15. All of these 10 or 8 members here is considered as a key management personnel. Yeah? Okay, and then another one, maybe the other one is chief executive officer, chief operating officer, and chief financial officer. Sometimes they are not BOD, they are under management team. Yeah, so management team. Sometimes, especially for the CEO can be at the BOD, can be a part of BOD, or can be a management team. But for chief operating officer and chief financial officer, they are management team. Yeah? They are not board of directors. Yeah? Okay, and then you have a vice president. Yeah? So this is a member categorized under key management personnel. Yeah? So you have to know this one. Yeah? Who are they? Okay. And then who are their close member. So close family member, close member of the family of a person that are those family member may be expected to influence, or be influenced by that person in their dealing with entity, which include person, children. So this is a close family member, person, children, and their spouse or domestic partner or your partner, children of the person's spouse or domestic partner, children of the person's spouse. Let's say his wife is already married before this and have a children, so that children is considered as a children of that person's spouse. Dependent of that person or that person's spouse. Dependents here may be fathers or mothers. Fathers or mothers. Okay, fathers or mother. But that fathers or mother should have a influence over the directors. Maybe directors, yeah. Directors, fathers or mothers, yeah. Okay. Dependence of that person or that person's spouse or domestic partner. Governments here is referred to government agency and similar body, whether local, national or international. The government, this is the difference. Yeah? This one is related with the close family member. Who are they? Make sure that you understand this one. Yeah. Okay, the government's selected entity is entity that is controlled or jointly controlled or significantly influenced by the government. So example here for GLC, government linked company, example Khazanah. Okay, Khazanah here, Khazanah owns by the government. Government have more than 50% that control the company. So this one is considered as a GLC or government related entity. Yeah. So this is different from this one. Yeah. So this is another thing. This is difference. Okay, and then this one is related with the employees. For the employee, remember that the second the second individual that are related, considered as related party here is the employees. Okay, for the employees here is relate with the compensations. Compensation which include all employee benefit, including the benefit from MFRS 2 share-based payments. Employee benefit are all form of consideration paid, payable or provided by the entity on or on behalf of the entity in exchange for service rendered to the entity, and it also include such consideration paid on behalf of the parents of the entity in respect to the entity. So for employees here, it's a short-term employee benefit. This one is provided to the current employee. So current employee, they are entitled for wages, salaries, and social security contributions. So EPF. Okay, so here annual paid leave and paid receipt. And then this one is for the post-employment benefit is ex-employee. For ex-employee, they are entitled for our pension, retirement benefit, life insurance, and medical care. So that one is also considered, the post-employee is also considered as a related party, and others long-term employee benefit, for example, long service leave, sabbatical leave, okay, jubilee, and so on, bonus and profit sharing. Yeah. So for individual, we have two. Okay, the key management personnel together with the close family member and also the employees. Employees here we have two types, current employee and post ex-employees. Okay, so para 11 mention what is not related party. A not related party, two entities simply because they are have a director of another member of key management personnel in a common, or because a member of key management personnel of one entity have a significant influence over the other entity. So what is this one? Okay, let's say director A. Okay, company A, company B. Okay, so director A here is Ahmad. So for example, Ahmad is a director in company A, and then Ahmad also a director in company B. Okay, so between A and B, they are not related party. Okay, so they are because of they have the same directors. They but A and B is not related party. Okay, the second one is two joint ventures simply because they share joint together. So remember that A and B come up with a JV. A and B not a related party. Okay. Provider of finance, for example, a bank is not related party, trade union, public utility, department or agency of a government that does not control. Okay, does not control means that they do not control. They are only a department, so a government's department. Okay, they are not control, jointly control or have a significant influence over the reporting entity. Yeah? Okay, and then the next one is a customer, supplier, franchisor, and distributor. Okay, it's not also not a related party. Yeah? So this one, the first one is director into company. The next one is a JV. And then the third JV here, A and JV is related party, and B and JV is related party, but A and B is not related party. Yeah? Okay, this one is a bank. So a finance provider, trade union, public utility, and then government department. But these two do not have a control over that company. And then the last one is a customer, supplier, purchaser, and distributor. So this one is not related party. So you need to be careful with this one also. Okay, we try to look at these examples. Okay, for these examples here, X is a manufacturer of automobile spare part. Okay, Transite. Okay, X here is a reporting entity. Okay, so it's Transite business through a business model. So what is they use a business model that worked for several years. Okay, and then it's believed that it's working is reliable and dependable vendor, and also sell only to the entity that can either control or exercise significant influence. So they only buy from a dependent vendor and also sell to the company that they have a control or exercise a significant influence. So this is a business model done by X. So we need to determine here whether the partners, the entity that dealing with X is a related party or not. Yeah? Okay, the first one, X purchase everything. It's need from entity Z. So purchase everything from entity Z. So entity Z here is a supplier. Okay. Due to the high quality of the material the entity Z provided over the last 10 years, entity X has never purchased from any other supplier. Thus, it may be considered economically depends on entity Z. So in this situation, already you have the answer at the end, but I just want to explain here. So if you look at this condition, X and Z here, okay, X and Z here is relationship between company and supplier. So company and a supplier, which is X here. So the supplier here is not a related party. Must remember that item para 11 here, it define that supplier is not part of the related party. Refer back to item para 11. Yeah. Okay, the next one. Okay, X sells 70% of your output to the company owned by a director, and the balance is to the entity that is associated. Okay, so X selling 70% to the company owned by its directors, by a directors. Okay. Then another 30% sold to associate. So X with this associate here is a related party because this is associate. So you need to refer back to the related party. This one is related party with the entity. Okay, and then the next one, 70% sold to the company owned by the director. So the directors here is key management personnel. So this transaction also considered as a related party transactions because it's sold product to the company that are or output to the company that is owned by its director. So its director here is key management personnel. So this one is considered as a related party. Okay, and then the third one. Okay, the third. If you have any question, please. Okay. Okay. Then the third situation here. At store. At store inventory in a warehouse. Store is inventory in a warehouse that is leased from the wife of the director. Okay. The lease rental are arm length transactions between a buyer and a seller. So X, okay, with a lease has a lease with a wife of director. Okay, wife of director is a close family member of key management personnel. So this transaction is considered as a related party transaction. Okay. Because dealing with the company that is owned by wife of director. Wife of director is a close family member of key management personnel. Okay, and then entity X provided an interest loan to the company So they provide loan, okay, loan to the company that are owned by the CEO. Okay, loan and company owned by CEO. Okay. Okay. And Authority Act purpose for financing and the purchase of deliverable which a company owned by the CEO is using to transporting goods from the warehouse to the suppliers and then to the warehouse used by the entity acts for transferring storing the inventory. So it's provide loan. So loan here is a transaction, and then this transaction was done with the company that are owned by the CEO of the company, CEO of X. Okay, you have to be careful here. CEO of X. So they say that one is CEO of Y is not related, but this one is CEO of X. Yeah? So this one is considered as a related party transaction because the CEO of X here is a part of key management personnel. Okay. So any questions that you have for this one? So it's already explained here. Already explained it. So any questions that you have for these examples related with the related party? Okay. Okay, it's provide the explanations. This is the explanations. Okay. So look at the disclosure. So for the disclosures here, you need to know the purpose of the disclosure. So enable the user to understand the effect. Okay, the effect of the related party relationship. Yeah. Okay, and then they're going to disclose the risk. Okay, the risk that may affect the transaction may be a favorable term with a potential impact if there is a risk on the profit for that transactions impact to the profit. Okay, the first one you're going to view the effect of the related party relationship. The second one you want to know about the risk of the that will be impact the profit of the company. Yeah. Okay, the relationship between parents. Okay, about this one, cannot see this one. Parent and its subsidiary, irrespective of whether there has been a transaction between them. Okay, need to disclose that one also. If the parent have a subsidiary, they need to disclose this information, even though there is no transactions between parents and subsidiaries. Yeah? Okay, as long as there is a control exists. Okay. And then the key management factor, personal compensations here need to disclose in total how much the amount that you pay for the short-term benefit for the salary, salary or wages here, post-employment benefit for the pensions, other long-term maybe sick leave, termination benefit, and then share-based payment. So this one you need to provide in amount, total amount, how much you allocate for the salary, post-employment benefit, and the long-term benefit. Yeah. Okay, and then para 18 here, para 18 here should disclose the nature of related party relationship as well as the information nature of related party relationship. Either that one is related with the entity here we have two, either that one is subsidiary or associate or relate with the individual. Either that one is a key management personnel or employees. Yeah? Okay, for employee, for employee you have current and ex. Okay. So you need to disclose kind of transaction, the outstanding balance, including the commitment. Okay, this one is because you want to help the user to understand the potential effect of the relationship to the financial statement. Yeah. Okay, others a minimum disclosure here. You need to disclose the amount of the transaction, the amount of outstanding balance, provision for doubtful debt, and expense recognized during that period. For example, of the doubtful debt due to the related party. Okay, so the amount, this one also amount to incur of the activity by the provisions of key management personal service. So much you pay for the key management service. Key management service is like for the director, how much you pay for the director, and then how much you pay for the employees. BOD, Board of Director. Okay, remuneration, this one is salary. Okay, item para 19, disclosure about the parents. You need to disclose who is the parents. An entity with a joint control or significant influence relate with the associate, subsidiary, and also associate. JB, same thing as this one. Key management personnel of the entity and others related party. If you refer to the annual reports here, you're going to find the profile of directors. Yeah? In the profile of directors is going to inform you about who is the key management personnel in that entity. Yeah? Okay. Okay, this is example of the related party transaction that need to be disclosed. Sales of good, purchase of good, services, lease, R&D and so on. Yeah? Okay. So para 24 mention that item of a similar nature may be disclosed in aggregate. Okay, similar nature need to be disclosed in aggregate except when separate disclosure is necessary, yeah, to understanding the effect of related party transaction on the financial statements of the entity. Okay, this one is related with the government related entity for the GLC company. Yeah? So for GLC company, a reporting entity is exempt from the disclosure requirement of paragraph 18 in relation to related party transaction and outstanding balance, including the commitment with the government that have a joint control or a significant influence over the reporting entity. Another entity that is related to the party because of the same government has control or joint control or significant over both of the reporting entity and others entity. So the GLC here is exempt from the disclosure in the paragraph 18. Yeah? So they do not need to disclose item in paragraph 18. Yeah? Okay. Paragraph 18 here is about the nature of the transaction, including the outstanding balance. Okay, paragraph 26, you just read this one. Okay, it's about the GLC's company. We are not going to focus on the GLC's company. You just read this one. Only read this one. So the things that you need to focus here, okay, this one. This one is very important. Okay, this one. What is the thing that you need to disclose? Okay, this one also. This one is related with the entity, yeah. Okay. Okay, you need to know this one because the question for the RPT is more on theory. Yeah? Make sure that you answer the theory questions. Just go through your exam questions, but you don't answer for the theory parts. Yeah? Okay, and try to understand this example. Okay, try to understand the examples. Yeah? Okay, and then this one is very important. Para 11. Very important this one. Okay, very important. Make sure that you understand this one. And then, so starting from here, okay, starting from this slide, the related party here is for the entity, okay, and then related party for the individual is important, okay. And then they explain who are key management personnel together with their close family member. So focus on this one. This one's maybe not related. This one, yeah. Okay, and also this one. Also important to know. Okay, and then para 11, yeah. So you need to know the relationship between the related parties. So related party, we have two. Either that one is entity. Okay, for entity, you have either a subsidiary or associate. Okay, and then JV. Okay, and then for individuals here, we have a key management personnel plus the close family member. And then the other ones you have employees and ex-employees. Okay, so that is what you need to have here. Okay, so any questions that we have here? So since this is a theory questions, okay, make sure that, okay, and yes, we cover from final assessments. Answer for exercise topic 7 and 8. Okay, we're going to discuss that one. I already provide you with the exercise, right? So we still have a class on this coming Monday. So this coming Monday, we're going to discuss the answer for that exercise. But make sure that you prepare the answer for that one. Okay, for this coming Monday, what we're going to do for this coming Monday, okay, this Monday, yeah. So we're going to have the exercise of topic 7 and 8. We're going to discuss on this one. Make sure that you prepare the answer. I just want to discuss this one briefly. Okay, and then we're going to also discuss at least if we have time, one question from your tutorials 5 and then one question from tutorials 6. So previous group already select for questions number 3 for EPS. EPS is number 4. We choose EPF is number 4. This one they're going to discuss questions number 3. So for your group, because I'm going to provide both to your the recorded class to both of your groups. So for you, I'm going to discuss for questions 5, tutorial 5, maybe questions 2. And then for tutorial 6, EPS, we could discuss question 5. Yeah? But I'm going to put, actually, I already provide you with the answer recorded PowerPoint. So just look at that one, compare with your answer. So if you don't know that one, if you have a question, then we discuss on detail about question 3, question 4 with a previous class, and then question 2 and question 5 here is with your classes. So you're going to get benefit for both. I'm going to provide a recorded class for both your group G and group H in your online. So any other questions? So your exam here will be covered from topic what you have here, EPS, EPS, foreign operations, related party, and operating segment. And then this test 2 as compared to test 1 is I can say that one is much more simple as compared to test 1. So please make sure that you score for this time. Don't give me the reason that you don't have enough time to answer all the questions, but this time please, because you know that how is your performance for the first exam. Okay, so please, okay, since this topic is not uh, heavy topic, you can answer that or you can understand that topic. So please study for this time. Yeah? Okay, for this 4 topic. Yeah? So any other questions that you have here? Any other questions? I'm going to provide with you with the booklet and also the pledge form, the same thing that you need to do. Okay. Any questions that you have?